Hello and welcome for a live webcast where by popular demand today we are tackling UAE entry to market from Switzerland and from the epicenter of Zurich here with Elmar Meyer. So Elmar is a good buddy, super rounded professional based in between Zurich and Zug, but he's uniquely positioned to help us understand how the smart money can take advantage of going UAE because he worked there and with experience in both compliance and legal. So a very interesting profile. Elmar, thanks a lot for joining us.
Thanks for having me.
So we said we would tackle entry to market into the UAE. So we are going to split this into two episodes. Later on, we will tackle proprietary investment, single family office, and how these profiles can take advantage of UAE solutions. But what interests me to start with is we have seen a wave of interest post-COVID for financial regulated institutions, independent asset managers to look at different emerging market. So asking you the first question, why do you see all this interest now from Switzerland for the Gulf and the UAE in particular?
Yeah, I mean, where should I start, right? If you if you believe in the latest statistics, every hour a millionaire takes root in the UAE, somewhere between Dubai and Abu Dhabi. So obviously, it's a very, very growing market. There's millionaire migration going down to the Emirates. You have two, first or world-class regulators with the DIFC, with the ADGM, so you have a regulatory security which is hard to beat in such a small place. And it very much has also the Swiss standard, right? I mean, when I used to work there, we had a very tight interaction with the regulators. They listen to us, they understand the industry. And I think coming from Switzerland, going down there, it's not a big step. It's very similar how they work. They want to have things done, but they do it much faster. And that's what, when I talk to colleagues, they're impressed how UAE is really entrepreneurially friendly and how it attracts money. So obviously, growing the market means also there's more market for asset managers. And we see that definitely from Zurich, but also from Geneva.
Yeah, so I would second that fully. I think it's when you think about money management, you think first about stability, security of law, and this is something that the Switzerland and the UAE have in common because the UAE has decided to go common law full-fledged, not to rebuild something from scratch. I think that was a very sound move. And you mentioned it from a macro level. I think the UAE has arrived as a financial center. It is today one of the only 8 global financial centers in the world. What you see also when you ask around internationally, it's the #1 financial center expected to grow further. So if you are a financial institution, you may want to look into that just for that. Also, the clients are coming. What I find interesting is that back in the days, it was only royal families. Now it's a completely different atmosphere. You have the local clients, sure, but you also have the regional, supra-regional, and reasonably new post-COVID. We have seen waves of super sophisticated people from China, from US, from pretty much everywhere, tapping that market for multiple reasons, also because of the UAE structuring and residency solution. So it's like a full package, yeah?
Correct, yeah. I would agree to all what you just said. Capital is moving there, so asset managers are moving there as well, right?
Yeah. So let's shift gear now and look at, in your view, from the Swiss perspective, what are the biggest factor that make the UAE attractive for regulated financial institution, and then we'll look at how to capitalize on these factors.
I think if you go down to the UAE and want to do business, I think one important thing is you need to respect culture.
Yes.
Yeah. You need to have local access, and you need to think about how you get access to the clients, right? Pretty much like in Switzerland, really. But so back in the days, many banks and asset managers, they did the so-called suitcase banking, and I think these times are over. You need to be on the ground. You need to, have a client relationship that is close. You need to be close to people, and I think that's the big difference. 20 years ago, when we started to go to Dubai, there was a much inflow of people coming in and out. And now really you take root, you have people there on the ground, and you have your own network building the business. And I think that's a super interesting opportunity for a Swiss asset manager, because we have the backbone here with everything. Yes. We have the backbone with the banking, with the lending, with the custody, and you can bring this Swiss quality down there, but you need to have the people on board.
Fully agree, and I accept that 20 years ago, people did not want their banker to be there. I think there was a real, we do not know exactly where this country is going. It's nice to live, but let's stay prudent. And this evolution of the UAE in all facets now has led to, I actually want my banker to be on the ground. I want him to demonstrate that he understands the region, that he has the local knowledge, know-how, etc. So complete shift, and we will probably touch later on about what sort of structure one should register. Now, a question for you from a FINMA versus UAE regulator, the DFSA in the IFC and the FSRA in Abu Dhabi Global Market. Contrast and compare. A lot of people may think that it's more difficult in Switzerland or less difficult. So what is your view since you have been practicing in both?
Okay, so if you are already FINMA regulated, if you know FINMA as a regulator, I think you will not be surprised in terms of level of scrutiny that you see in the IFC and the ADGM. I think one of the main differences that both UAE regulators are very proactive. So whenever you ask for a license, whenever you want to know whether or not a certain service is regulated, how the license would look like, you actually can reach out. Yeah. They're very happy, they kind of advise you even, it's very nice. And they want you to understand everything that entails with the license. So I think, whereas FINMA is more a reactive body of governance, I think ADGM and DIFC are in a place where they really try to help as a client to come down to the UAE. And that's for me the biggest advantage when I talk with clients.
So I would agree with that, and I would add that what I like in the UAE is that you have a very proactive, very politically driven regulator that wants to attract a large number of RFIs. We talked about the numbers earlier. It's almost 1,000 regulated firms in the DIFC today, almost 400 in Abu Dhabi Global Market. This is a number that is constantly evolving by 17-20% annually. So clearly they have a lot of work processing authorization, which gives them an incentive to do that fast. And what we have seen is a complete different change, which back in the days, both regulators were more focused on asset managers and banks. And now it has shifted where they are very welcoming to category 4 financial advisory. They are telling these firms, come, test the market, hopefully you'll succeed, and you can always bump up your license later. So maybe a few words on that. We talk about reasonably similar licenses and supervision. What about capital adequacy? Because it costs money to set up shop. So contrast and compare these maybe.
It always does, right? So in Switzerland, the minimum capital is 100,000 to go there. Whereas in the UAE, if you go DFC category 4, it's $10,000 base capital. Same in the ADGM. And ADGM, if you go category 3, so asset management, it would be 250,000, whereas in the DFC, 500,000. So it's always a little bit a different level. But at the end of the day, it's not only the base capital, but also the running capital you need, right?
Yes. Yeah, and both regulators will look at your budget, your projection, etc., and ensure that you do not start unless you put money where your mouth is. So
a certain runway, correct?
Yes. We talk capital adequacy. One vehicle that doesn't need capital adequacy is the rep office vehicle of old. I'm not a fan. We can discuss that. What is your view from a Swiss standpoint of someone saying, I want to test the market and just drop a branch as a rep office in the Middle East?
Look, I share your view. We've seen that in earlier cases, a rep office is really a glorified post office because there's really not much you can do. All you can do is give information about your firm in Switzerland. That probably never really translate in any real business. So I think I agree with you. If you would start with the advisory license, CAT 4, I think that's how you would test the markets.
Yeah, and to that, maybe yes, it's a glorified post office, it's a cost center. What I don't like is the message it sends. I think it says, oh, I'm going there to take, where a CAT 4 is like, no, we are going there, we are putting boots on the ground, and we are going to give. and you are going to get much more in return. The other thing is the ability to grow over time. If it works out, and the hope is it works for plenty of firms, if you have a rep office, you need actually a completely new application in a year or two to go to something more prominent. Whereas if you have a Cat 4, it's very easy to bump it up, add discretionary management, maybe a fund management license, maybe a digital assets distribution, whatever. So the flexibility is there. And there's another element which I think should be considered is attracting and retaining talent. It is very challenging to go to someone and say, yes, come work for us in Dubai or Abu Dhabi, and saying, well, we have a rep office and we are just selling Switzerland or another jurisdiction. I find that it's something that needs to be considered if you put your entrepreneur's hat.
I think you're right. I think it's very hard to go out, give business cards and say, I work for an entity in Switzerland.
Yes.
And if you want to know more about the service, you call Geneva or Zurich, right? So I think I think that's not really a business case that will fly.
Talk to me, and we have had a few files of late where we collaborated about the process. So the process of lodging an application, how it works, how long it takes, when you can really start to do business.
Yeah, so both ADGM and the DFC, they have a digital platform, right? That's in line with the UAE strategy. So it's a very formal process if you want. It's very digital. You have to prepare all the documentation. You have to prepare. You have to show the capital equity requirements and all of this. You have to obviously have some hires. You have to put boots on the ground. You have to have a local SEO, so a senior executive officer. That's something you can't outsource. But that's one of the main functions they will have a requirement for. Besides that, you will need a compliance officer and a finance officer, all of which you can outsource, and I believe many do. So that's a market there that there's a lot of service providers, obviously. And I think in terms of timing, if you have a well-prepared application, again, together with the regulators, they really help you each step of the way. I'd say 4 to 8 months maximum category 3, maybe a little bit faster when you do category 4. So I think this is a business that can be ready very soon.
Agree on all this. I'll add to that the fact you talked about outsourcing, which is reasonably new now in Switzerland. Your firm is offering that here in Switzerland. And we're lucky enough to be very active in that market. We outsource to more than 100 financial institutions between the AFC and EDGM. And we do so because it is a strategy by the regulator. They want people to outsource initially because they do not want cowboys to come and say, okay, I'll take someone, just plug in there. That's a bad risk for the jurisdiction. So wary of risk, they are insisting if you are a startup, if you're a Cat 4, a Cat 3C and you start, to outsource as many functions as you can, rely on people that know the market well. The bankers or the asset managers focuses on what they do best, take care of clients, and they rely on a backbone that is experienced with the jurisdiction, with the reporting, and this way it protects the entire market.
But see, that's again a great example of the collaboration between the regulator and the private sector, so fantastic example there.
Yeah. Talk to me about maybe because you've seen some positive stories, some negative. So give me some of the pitfalls. What should someone coming from Switzerland avoid when looking at the Middle East and entering the market?
Look, the Middle East is a strategic investment. You will not make money in 6 months. This is an investment that you do. We say, okay, we're going to be here for a while. You need to build up relationship. It takes time. The Middle East is very face-to-face economy, if I can put it this way. You need to be on the ground, you need to find the right people, you need to have the right network. So that just takes time. And I think this is not like an El Dorado where you go down, you make money and you leave again. It's really a strategic move. And when people consider that move, they should consider a timeline of minimum 5 years. And I think if you go with that mindset, you'll be successful.
And it's also a hedge because I think Switzerland is very complementary to what the UAE has, but it is increasingly challenging, I find, for a financial institution to say we are only in one jurisdiction. I think it is important not necessarily to be fully global, but to be selectively global. So to be in key jurisdictions that are relevant, where you can offer clients A, B, or a combination of both. Yeah. We talked the advantage of coming to the EU, one impact that has completely changed the past few years is the introduction of corporate tax, which I think has helped the street cred of the UAE. There's a 9% corporate tax that was introduced, but financially regulated services benefit from an exemption, so that anyone that would come and operate out of the UAE would be at zero in key financial classes. So talk to me a little bit about the interaction between a Swiss EAM, for example, or financial institution, and a UAE entity from a fiscal potential friction standpoint.
Yeah, I mean, obviously, if you operate in two jurisdictions, you need to make sure you know both tax regimes, right? Yes. So if you operate in both jurisdictions, you need to make sure that tax-wise, you have transfer pricing in place between those two entities. You make sure that you know which entity is doing what, because the last thing you want is that the Swiss tax authority would say, your effective place of management of this whole group is actually in Switzerland, and there's just a PO box somewhere in Dubai, so we're going to tax the whole profit here in Switzerland. So it's really, see a tax advisor about this, but obviously manage those two entities in terms of tax. And if you do it right or correctly, then you can actually repatriate all the profit from the UAE entity, tax-free, into a Swiss entity. Yeah, absolutely, yes.
Final question to you. So I run a firm that has a foot in both ADGM and the IFC, which is rare. It's only 13 firms like this out of 5,000 service
Congratulations.
providers. We're trying to work on it. My question to you, from a Swiss standpoint, should one consider Dubai, Abu Dhabi, both, and why? Or maybe for different profile. What is your take?
I give this question back to you after I answered, because obviously I have a lot of experience in that. My take is, what I see is the people that, or the firms that open in Dubai, they go more for the private wealth, because there is more private individuals. The millionaires move to Dubai, not so much to Abu Dhabi. So if you go into, like say, private banking classical, you would rather open in the EFC. If you're more into institutional money, if you go for the bigger tickets with Adia and the like, you probably set up a space in the ADGM. So that's what I see from the Swiss perspective.
Yeah, I would agree with that. I think the UAE is focused not necessarily on a certain geolocation of clients. It is looking at a quality of client. So it is attracting people from all over the world. But the perception by these clients coming from one jurisdiction or another is different. So we have seen, for example, a lot of American single-family offices of late, or Chinese single-family offices. They choose Abu Dhabi, because they felt that the capital was a little bit better tooled for them. So typically, if you cater to these sorts of clients, or maybe CIS type clients, probably Abu Dhabi, you should look at both for sure, but maybe Abu Dhabi will be better positioned. There's another thing. If you want to build a strong relationship management team, recruitment is a key element. I learned today that actually a lot of banks from Switzerland have strong epicenter here in Zurich because of recruitment, because talent is more located here or easier to attract here than in other parts of Switzerland. I think it is still the case today. It's slightly easier to draft people to Dubai, but it has changed dramatically. I think the past 3 years, Abu Dhabi has boomed substantially in terms of infrastructure, and today they are pretty much even. But I would also agree that if you chase institutional money and if you want to deal with the sovereign, it is a must to be in Abu Dhabi. Yeah. If you are looking more at private wealth globally, I think it's pretty much even, and then it becomes more of a lifestyle and soft decision than the decision of counterparties.
Agree.
Lovely. Elmar, thank you very much. So that's it for this regulated path entity. And in our next episode, let's look at the smart money, the proprietary one. Thank you.
Thank you.